Hi, everyone. Welcome to your latest Carson's Take 5 with Ryan and Sonu. Sonu, we've been hearing about the economy slowing down. We're going to talk about that today. We're titling this one, Why We're Not Worried About a Slowdown. I'll set it up and hand it to you. We just saw some GDP data that came out recently, revised a little lower. We saw some consumption data, a tad weak. We've seen some other potential cracks in the economy. What we're hearing on TV is the economy, which was doing well, is just sliding straight into a recession. How worried are you about this little bit of economic slowdown we've seen?
I'm not worried. I'll put
there we
it
go. We're done.
We're done. Yeah. Let's close off and go home. No, we're both of us already home. I think for context, what happened in the first quarter? Yes, GDP growth in the first quarter is about 1.3%. But a lot of that was inventories, the volatile part of GDP growth, as well as net exports. If you look at private demand, right? Households, government, businesses, it was up above 3%. What's happening now is we're not growing at that faster rate. Right. Instead, we've slowed down a little bit. We are slowing down, going from 3 to maybe 2 to 2.5%. That's where I think real final demand, this is after adjusting for inflation and all of that, right? That's what's essentially happening in a nutshell. We're going from 3% to somewhere 2.5%, which is a wrong trend. It's not too bad. And it's, just to be clear, it's nothing like recessionary, anything like that. Income growth has been going really strong. That's slowing down. It was unlikely to grow red hot anyway. Same thing with consumption. Consumption's also easing. Part of that is goods consumption is switching to services consumption. You and I know for sure I'm not getting as many Amazon boxes anymore outside my door.
We still have a lot around here.
You have 3 kids and 2 dogs.
There you go.
But no, look, that's what's happening, right? There's a switch in terms of good consumption from goods to services. And we're seeing that services make up about 45% of the economy. So it's significant. So I think services is running pretty much above trend, above the pre-pandemic trend. So I think there's still a good story that the economy is strong. The labor market is strong. Yes, hiring has eased a little bit, but the unemployment rate, we are yet to get, jobs numbers. By the time this video is out, we may get the May payroll report. But, look, everything we've seen so far with labor market data suggests, employment's in a pretty healthy state.
There we go. So we're about halfway done with this week's Take 5. I think the bottom line is this, right? The economy last year grew about on a nominal basis like 6%. That was really, really strong. We're really going to hit 6% again this year. There might have been a chance, but maybe not. I mean, we continue to think we're more normalizing. I want you to talk about this in a second, so what this means. But to us, it's not like we're just slowing down, going straight into recession. We're normalizing. We were way up here. Now we're down here. It doesn't mean we're going to go all the way back down. And again, that's a good thing. I mean, we just had a really, really strong earnings season once again from corporate America. We potentially see low teen earnings this year on the S&P 500. That's really strong. Right. And again, I know manufacturing was a little weak. If you see some of the data, I'm sorry, construction was a little weak, but you talked a lot about this. I love when you talk about this. If you look at manufacturing, construction continues to soar. If you look at high technology, construction continues to soar. So there are really some positive parts underneath the surface. And when you hear, let's see how much time we have. We've got a little over a minute to go. What does normalizing mean to the average person listening to this when we talk about the economy is normalizing?
I mean, you said it, right? From 2010 to 2019, nominal GDP growth, this is before accounting for inflation, was running about 4% on average. Okay. The highest we got to is maybe 4.5%, 5%.
Yep.
Last year, we did 6%. So just using it, literally what you just said, we're going from maybe 6 to 4.5%, 5%. Not bad, but it's not as strong as 6%, right? Last year, we grew more than China in terms of economic growth, right? It's before adjusting for inflation. So I think that's what's happening. That's what I mean by normalization. I don't think we're close to a recession, at least not with any of the numbers we follow.
Yeah, exactly.
So that's some perspective for you.
Another way to put it, like, remember last couple of years, we'd be growing to like 400,000 jobs created every single month. We'd see 5-6 million jobs created. That wasn't normal. Now, listen, we were making up a lot after people lost their jobs during COVID and the pandemic coming back. But now, we're hopefully moving into a world where we're seeing jobs growth, I'll just say between 150,000, 250,000 every single month. And again, that is growing fast enough for the economy to continue to grow. And if people have jobs, they're going to consume. Wages, like you talked about, are still strong. I mean, are there cracks out there? Of course there are cracks out there. But again, we do not think we are headed straight to a recession. We think things are still pretty good. And again, that's what we talked about this week in the latest Take 5, why we're not worried about the slowdown. We'll see everybody next week. Take care. Thank you.